Now let's move on to the second question. The question is relating to the for impact of foreign exchange in property, plant, and equipment. So let's move on to the question. Explico Limited has a foreign subsidiary in an operating in India. The domestic currency for Explico is USD. So basically, our client Explico, it is it is a US based firm which is operating in the US but has a business in India. So at the end of the year, Explico issues consolidated financial statements. And in order to prepare consolidated financial statement, they need to translate the financial statement that is prepared in rupee to US dollars. Translate its Indian operations from rupee to US dollars and prepare the consolidated financial statements. Now, the first date we're going to encounter is 1st Jan 2017. On that date, the exchange rate is rupee 60 per dollar. And the original cost of the machine is $10 million. The original cost of the machines, sorry, rupee, 10 million Indian rupees, which is going to be depreciated over a period of 10 years. Now, this is the scenario as of 1st Jan 2017. Now let's come to 31st December 2017. On this date, as of this date, we need to prepare the consolidated financial statement. And in order to prepare that, we need to convert the figures from the rupees to US dollars. So let's see what is the figure, what is the carrying amount as of 12/31st 2017 in respect of that particular property, plant, and equipment. Because we are going to depreciate the asset over a period of 10 years, the net book value of the PP&E would be $9 million, and the cost of the PP&E will remain the same, 9 million rupee, and the cost will remain the same at 10 million rupee. I'm assuming there is no purchases. I'm assuming there is no purchase or disposal during these periods. The assets remain the same. Hence, the net book value is 9 million rupee, and the total cost will remain the same at 10 million rupee. Now we need to translate 10 million rupees into dollar terms. What is the cost of the asset as of December 31st, 2017? The cost of the asset would be $10 million. $10 million divided by the exchange rate as of that day, that is rupees 70 per dollar. So we need to divide 70 we need to divide the 10 million from 70 in order to arrive at the cost of the asset. So as of 2017, the cost of the assets is coming out to be $142,857,000. This is the cost of the asset in respect of property, plant, and equipment in dollar terms. Now, we will record this amount in the financials prepared by Explico at the dollar level. After that, let's start reporting as of 31st December 2018. The cost remained the same. We did not purchase anything. We just depreciated the asset. So the net book value on this date would be rupees 8 million, and the cost of the asset will remain the same at 10 million rupee. Now the question is, what would be the amount that we're going to report in the consolidated financial statement? So we need to follow the same procedure. We need to translate the rupee figures into dollars. And as on the date, as on 12/31st 2018, the translation rate went from 70 to 80. So there is the change in the rate. Previously we divided by 70, now it's 80. The amount is coming out to be $125,000, which means we need to report the property, plant, and equipment at $125,000. See, from 142K to 125K, we did not do anything. We did neither disposed of, we did not scrapped out anything. There is no impairment loss. Only because of the exchange difference, the cost of the assets came down from 142 to 125. Now, this is the impact of foreign exchange. Now, we will discuss how do we need to present it. So the presentation will look like this. The cost of the asset on the first January 2018, the cost of the asset was 142,857. We did not make any additions, we did not make any disposals. Now comes to the picture the exchange difference. This is the balancing figure. We know the balance as of 12/31st 2018 is $125,000. However, we do not know the what is the exchange difference. Basically, it's a balancing figure, which coming out to be 17,851. So this is the way we present in the notes to the financial statement. To sum up, the cost was 142. There is an exchange difference of 17,851, due to which the cost of the asset is going to report it in the notes is 125,000. The same thing we will do for the accumulated depreciation as well, in order to arrive at the net book value. Net book value. Hence, this question summarizes the impact of the foreign exchange differences in the books of accounts. So to sum up, the net book value in the books of Explico Limited would be around $100,000. $100,000. How did I compute it? What's the net book value? 8 million. 8 million rupee, right? 8 million rupee divided by 80, the exchange rate, rupee per dollar. So this is the net book value. Net book value. As compared to the net book value on 2017, it would be 9 by 70. 9 million by 70, which is around 128,571. So the exchange difference is around 28,000, 28,571. So this is it.